Government could not meet its revenue target of 96.84 billion, which was 15.7% of GDP, as it recorded 96.65 billion. Total government expenditure for the year amounted to 146.33 billion. That is 24% of GDP, which was above the target of 135.74 by 7.8%. Ghana faced severe financing constraints arising from the effects of continuous borrowing against lower productivity, lingering effects of the COVID-19 pandemic, and the tightening of global financial conditions. Rising fiscal deficit and public debt levels raised sustainability concerns, resulting in a series of sovereign credit rating downgrades. In its quest to shore up revenue, government introduced e-levy, which was passed by Parliament and took effect from 1st May 2022. Whilst external financing options closed and domestic financing sources limited, the government in July 2022 requested for financial assistance from the International Monetary Fund, IMF, aimed at restoring macroeconomic stability and debt sustainability. Though Ghana reached a staff-level agreement with the IMF in December 2022, there was the need for a comprehensive plan to restore debt and fiscal sustainability. This plan included the domestic debt exchange program and external debt restructuring. And how do we situate the GMA fund in all this? The GMA fund recorded 29.25% growth of total assets in 2022, with a value of 246.66 million from 192.3 million, and was driven by its investment assets and the cash equivalent. The fund performed 19.36% in 2022 against 23.66% in 2021. Total investment and other income of the fund moved from 26.4 million in 2021 to 40.6 million in 2022, representing a 54% growth. This was on the back of interest income, dividends from equity, interest on call, and gains realized from the sale of a portion of its equity asset position. As part of its strategy to crystallize its gains on the equity portfolio, the fund liquidated portions of its holding in Societe Generale Ghana, Benso Oil Palm Plantation, and Total Petroleum Ghana Limited. Total expenses of the fund increased marginally from 2.3 million in 2021 to 2.5 million in 2022. This was inclusive of fees to service providers and administrative expenses for the period under review. Offer to exchange eligible bonds, which I guess you are all itching to hear. The DDEP. Government proposed to roll all holders of eligible Government of Ghana bonds, Daction bonds, ESLA PLC bonds, into domestic debt exchange program. The new bonds on offer had longer maturity dates and lower coupon rates. Organized labor held a series of meetings with government to express their disagreement with the terms of exchange and offer alternatives to the proposed debt exchange. The two parties failed to reach a settlement. Government on December 22nd, 2022, made a decision to exempt all pension funds, including the GMA fund, from the exchange program. In line, change of external auditors. In line with regulatory compliance, our auditors, UHY Voscom Chartered Accountants, has served the fund for 7 years and were required to cool off. The board, therefore, with authorization of members of the 19th AGM of the fund, initiated the process to replace the auditors as stipulated by the Companies Act 2019 at 992. Expiration of tenure. The tenure of 3 elected directors, myself, Roderick Elas Reindorf, Dr. Frank Owusu-Sechire, second to my right, and Dr. Najama Glover, immediately on my right, expired in December 2022. Elections were held to choose 3 members of the fund to replace them. The election took place at the 19th annual general meeting of the fund in Bogatanga, and the following emerged as the new directors: Dr. Desim K. Bando, immediately on my left, Dr. Vishnu N. L. Abaite, second to my left, and Dr. Efia Osil-Jemfi, who for some family issues cannot be here with us this afternoon. Outlook for the Ghanaian economy. The central bank, in its quest to contain the sharp rise in inflation and its related expectations, implemented various measures. Among these are the increase in the policy rate by a cumulative 1,000 basis points in the year, and raise reserves requirement by 700 basis points to 15%. 100 basis points is 1%. So the 1,000 basis points is like, if we were at 15, now it became 25. I think now it's 30%. It was 20 and it's become 30. These measures aim at restoring and maintaining price stability with a view to firmly anchor inflation expectation and create conditions sustainable for growth in 2023. It is also expected that the gold purchase program will ultimately increase foreign exchange reserves. It is worth noting that government's negotiation with the IMF will yield the right structural reform benchmarks, performance criteria on key macro-fiscal indicators, and the finalization of memorandum of economic and financial policies to enable a government-rate staff level agreement, which will pave way for approval of Ghana's quest for IMF-supported program. In my closing remarks, the economy of Ghana is experiencing significant challenges. These times present an opportunity for the fund to look for innovative alternatives to the traditional investment products in the portfolio of the fund. The board, together with the key stakeholders in the management of the fund, are poised to explore all alternatives to safeguard the value of the fund. I would like to assure all our members that we are committed to ensuring that our funds make good returns, and the fiduciary duty of the board as the trustees of these funds are carried out with a high level of fidelity. Finally, let me seize the opportunity to thank you, and I'm doing so on behalf of all on the board, especially the 3 of us who are exiting. Let me seize the opportunity to thank you for entrusting us with the management of the GMA fund for 6 years. I also want to thank the staff and key stakeholders for their dedication to ensuring the smooth administration of the fund. I urge all to continue to keep faith with the fund as it strives to achieve value for its members now and guarantee retirement income and future security. Thank you very much for your usual cooperation.
Thank you very much, Dr. Chair. And shall we put it up for him better and the sitting board? They must have done something very excellent for the fund. And if you know how much the fund is worth today, you'd be clapping some more for them. Shall we put it up for them once again? And thank you very much, Dr. Reindorf. So in the report, you'd notice that Chairman mentioned the fact that there's been a transition of the independent auditor. So we'll take the report for the independent auditor on the year 2022, and that would be from John K. Company and Co. John K. and Co. And it will be presented by Mr. Gilbert Lomofio. Shall we put it up for Mr. Lomofio?
Thank you very much. Good afternoon to you, board members. Good afternoon to you, members of the GMA Fund. My name is Gilbert Lomofio, and I'm on K and Company. And I'm here to present to you the independent auditor's report on the financial statement of the Ghana Medical Association Fund for the year ended 31st December 2022. And Mr. Chairman, if you indulge me, I'd like to read to the members our opinion on the financial statement, the basis for opinion, key audit matters, and I'll also present you report on ethical and regulatory requirements. All right, thank you. So I'll move on to the opinion. We have audited the financial statement of the Ghana Medical Association Fund, which comprise the statement of financial position at 31st December 2022, statement of profit or loss and other comprehensive income, statement of changes in accumulated funds, statement of cash flow for the year then ended, and note to the financial statement, which include a summary of significant accounting policy and explanatory note as set out on pages 33 to 50 of the financial statement. In our opinion, the financial statement gives a true and fair view of the financial position of the Ghana Medical Association Fund at 31st December 2022, and of its financial performance and cash flow for the year then ended, in accordance with international financial reporting standards, and in the manner required by the company's 2019 Act 992. Basis for opinion. We conducted our audit in accordance with international standards on auditing. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We are independent of the fund in accordance with International Ethics Standards Board for Accountants Code of Ethics for Professional Accountants, and we have fulfilled our other ethical responsibilities in accordance with the code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion as I read to you earlier. Key audit matters. Key audit matters are those matters that in our professional judgment were of most significance in the audit of the financial statement for the year ended 31st December 2022. These matters were addressed in the context of the audit of the financial statements as a whole and informing our opinion thereon. We do not provide a separate opinion on these matters. We have determined the following as key audit matters. So the first matter we identified is the existence and valuation of investment assets. The fund's assets are primarily invested in listed equities on the Ghana Stock Exchange, Government of Ghana, and corporate bonds. The custody of this asset is entrusted to an authorized third-party entity. The valuation of this asset is based on their market price and the number of units held for the listed equities. For corporate bond and government bond, valuation is determined by the face value, coupon rate, and the number of days the asset is held during the year. How the matter were addressed in our audit. We obtained a list of investments in the name of the fund from the Central Securities Depository to confirm their existence and agree the total of the fund manager's accounting record. We reviewed the fund manager's valuation of the investment assets to ensure that they were correctly valued. We also reviewed whether the quarterly valuation of the investment portfolio by the fund manager as the basis for determining management fees were reasonably made and are accurate. The second matter is income recognition. Interest income is recognized in the statement of profit or loss based on the coupon rate, the face value, and the number of days within the financial year for which the assets were held by the fund. Dividend income is recognized in the statement of profit or loss when the fund's right to receive payment of the dividend is established. How the matter was addressed in our audit. We reviewed the design and implementation of control over the fund's income recognition. We confirmed dividend income received to the fund's custody account. We recomputed the interest income based on the agreed interest rate, face value, and duration for which the interest income relates. review the cutoff period for investment assets of the fund to ensure that interest income accruing to the fund after 31st December 2022 is recognized as interest income for the current year. Finally, we evaluated the adequacy of disclosures of interest income recognized in the fund's profit or loss account. Finally, I'll present to you on the report on other legal and regulatory requirements. We have obtained all information and explanation, which to the best of our knowledge and belief were necessary for the purpose of our audit. In our opinion, proper books of accounts have been kept by the fund so far as appears from our examination of those books. The engagement partner on the audit resulting in this independent auditor report is myself, Gilbert Adetelo Mufiu, whose practice number is ICAG/P/1417, and I stand for and on behalf of John K. and Co., which practice number is ICAG/F/2023/128, and is dated 31st day of August 2023. Thank you very much for your attention.
Thank you so much, Mr. Gilbert Lomofiu. He presented the independent auditor's report for 2022. I don't know if you understood it. We'll move on to have the fund manager's report. And our fund manager has always been Data Bank. We'll have Data Bank present the fund manager's report for 2022, and this will be done by Ni Ampasoa. Shall we welcome Ni Ampasoa? Shall we for him whilst he approaches us? He's going to tell us how they invested all the monies that we gave to him. So please welcome Ni Ampasoa. Shall we do it again for him? Thank you.
Give me that so I can hit the point. Good afternoon. So I'll take you through. We prepared a 20-slide presentation. It includes divider slides, so it isn't that many. So please bear with us. I'll also be standing on huge portions of the text that the outgoing chairman actually read out, because he sets the tone for how we operated in 2022. And it's within that framework that we were able to manage the fund. Then finally, I'll not be doing this entire presentation. I have my colleague, DataBank's Chief Investment Officer, Deborah, who will be taking you through how the fund actually performed in 2022, and then also so far in 2023. So if you can move to slide 5. The next one, please. Yes, this one. So the outgoing chairman spoke at length about the domestic debt exchange program, and I think that largely was the highlight for 2022. We have as a header over here that it's all but complete. The domestic aspects of it seem to be complete. We've seen the plain vanilla DDEP that are affected individuals, banks, and insurance companies. We've seen that which have affected pension fund schemes. We've seen other aspects of the debt being cocoa bills and even US dollar denominated debt, each of which have more or less been restructured. So the huge part that is actually remaining is the external debt restructuring. And we are waiting, hopefully, for an announcement later this year, where an announcement will be made as to what arrangement has more or less been done. In case you are sleeping under a rock and you don't know what is going on, we reached a level as a country where our debt was said to be unsustainable. Unsustainable meaning that we're not producing enough to be able to service it comfortably. The way that is represented on the chart here, think of this big green circle here as Ghana's debt to GDP. Our debt was more than the size of our economy. That was where we reached as of the end of December 2022. And with the domestic debt exchange program and other initiatives, the idea is to get this big circle, which is 105% of GDP as of December 2022, to a figure of about 55% of GDP by December 2028. So that is the task at hand for the powers that be, whoever is in charge, to try and bring down. In our analysis, we realized that there were aspects that, at least as independent people, we should be asking ourselves. So yes, a lot of proposals were thrown at us to accept deals, and a number of us were very uncomfortable about them. We were asking ourselves, so what is the government doing on its own as far as expenditure cuts to also bear this burden? I mean, to date, that remains to be seen. And then there are other aspects of the debt which have not yet been touched. There's been a lot of assurances about treasury bills and that will not be touched. Those rates are quite elevated. In fact, those rates are rates where they are more than the rates of the bonds that were even restructured. So your guess is as good as mine. And then, of course, there are contingent liabilities like contractor debt and stuff, which we've not really talked about or mentioned. So this is just laying the framework and 101 about the domestic debt exchange program. Next slide, please. So now we are basically under an IMF program that is slated to end in December 2026. And the IMF is not new to Ghana, or I would say Ghana is not new to the IMF. This, in fact, is our 17th time that we are actually going to the program. You don't see the dates here, but below here, we actually have the specific dates that we've been in the program. So the question that we were asking ourselves, and perhaps you may also want to know, is what is going to happen this time for it to be different? What is going to happen for it to be different? So we decided to take a look at how at least two indicators have performed from 1992 through to 2026, through to 2022, and then we have a forecast period of 2023 through to 2027 also to refer to. And the reason why we chose from 1992 is obviously that's when we had democratic elections. So this is all a democratic period. The parts that you see in blue here show the average 182-day treasury bill trend. The parts in the yellow show the currency, that's the cedi to the dollar, all from 1992 to 2022, and then we have a forecast period of 2026. These small boxes that you see basically show the periods under which we are under an IMF program. This last one over here, over the forecast period, is our research team's forecast of what they expect those indicators to trend like in 2020, from 2023 through to 2027. And what this chart is basically telling you is that under periods of an IMF program, if we, and maybe because I'm speaking to doctors here, if you're sick and they prescribe medicine for you and you take it religiously, if the diagnosis is right, that the expectation is that you should get better, right? So the idea is under an IMF program, we see the indicators trend a bit favorably. So your interest rates are coming down, and for all the periods that we are in an IMF program, and the rate of growth of depreciation of the currency seems to be gentler. yes, the currency is always falling against the dollar, but during those periods, there seems to be a gentler slope. So basically, we are saying that if we take our medicine, we should be okay for the forecast period that we've outlined. Now, that said, it's not so much as when we are in an IMF program, we have to emerge out of an IMF program and still stick to these policies in order to grow the economy sustainably. And that's what, as analysts and just lay Ghanaians, we are hoping for. Next slide, please. So we mentioned that the domestic debt exchange program, at least the domestic aspects, are more or less complete. And the fund, following the engagement that we had a weekend or two ago, we realized that we also participated in it. Now, that is not without its own risks. What we see going forward is that there's the heightened risk of perhaps default or reinvestment, particularly in 2027 and 2028. So you'd realize that for the pension funds and for individuals, the deal that they got was to have bonds that would be maturing in 2027. 50% of it will be maturing in 2027, and another 50% will be maturing in 2028. That is 30. The deep green bar represents the maturity values. That's a little over 30 billion each. So that more or less means that come February 2027 and then February 2028, government is going to be expected to pay the interest as well as the whole maturity or the principal in these years. Now, the question is, will they have the capacity to do that when we get there? It's our hope. If they don't, then a default event exists. And then say they even are able to pay us. That's quite a lot of money that we'll be receiving. How are we going to deploy that? That's also, I guess, a pleasant problem to think about. But that is what we are more or less saying that we should also bear in mind. Next slide, please. So amidst this, I guess, preparation of ground, the question we are now trying to answer or to pose to you is how the GMA fund has pivoted in light of all these developments. What the outgoing chairman has said, what inferences have been made, and then what we've also just talked about. So this slide basically shows us the asset allocation of the fund. It shows us which particular asset classes or investments we put our monies in. They are broadly broken up into, I think, 8. This is Government of Ghana securities, listed equities, corporate bonds, collective investment schemes, alternative investment vehicles. That's like real estate, exchange traded funds, there's cash, bank fixed deposits, and then deposits, fixed deposits with specialized deposit taking institutions like NBFIs. So this is the asset allocation which the board, the ICM board hold us to, and we invest based on this breakdown. Now, show the whole thing, please. So the gold bar that you see over here shows the position as of full year 2022. And the green below, the deep green below, shows you the position as of 9 months 2023. So thus far, we've been talking about 2022, and we're trying to give you a sense of how we've been working like in light of the environment. So you realize that we've tried to diversify away from Government of Ghana securities. It used to be 85% as of the full year 2022. As of 9 months, that's September 2023, that is now at 70%. You look at bank fixed deposits, we didn't really have any as of the end of full year 2022. That as of September ending stands at 18%. We had a bit of cash as of the end of 2022, and that's because the environment was very uncertain. We wanted to watch, wait, and see. That has since declined to 1% because we are seeing opportunities in other places. So broadly speaking, the idea is to diversify. We've been through a number of crises. When I say we, the country, yes, there was a financial sector cleanup. It caused us to act in a certain way, move away from banks and everything, and go heavily into Government of Ghana securities. We've had this DDEP now, and now we are basically telling ourselves that the lesson we've got from this is that everything is potentially risky. So we have to act based on research. We'll do our homework. We'll provide opinions. The IC meets regularly. We defend our case, and we don't act without the approval of the fund's IC. But broadly speaking, we are looking to diversify away from government securities. And you see over here that we've been able to grow that to banks and GSC listed equities. Our intention, or the intention of the fund, with the approval of the IC, would be to grow the exposure to corporate bonds, alternative investment vehicles, and then, if possible, if the economics of the fund, if to work for it, we'll do some offshore investments as well. So that basically is just the context. What I'll do right now is I'll hand over to my colleague, Deborah, to take us through the performance of the fund for full year 2022, and then for the 9 months of 2023. Thank you.
Thank you, and good afternoon, everyone. Good afternoon to the board. Good afternoon, members. I'll zoom straight into the performance of the fund. Okay, so for 2022, you can see that your fund grew by 33.4%. And in money terms, we say in nominal terms, that is about 61.78 million. Out of that, about 38% is coming from your deposits, so your contributions that are deducted on monthly basis, minus any payouts that have been done to people going on pension. And then 62% of that growth came from investment income. And in the subsequent slides, I will show you the breakdown of all that. In terms of returns, which you can see here, so the 62% investment income translates to 19. Sorry. So the 62% investment income, if you are looking at it in terms of returns, that is the 19.36% that you see. And that compares very well with the benchmark, which is about 18%. If you look at the asset allocation, which Nate spoke about, this one is us at the end of the full year, and us at then our exposure to fixed income, which constitutes the Government of Ghana securities, bank deposits, and all that. That came to 89%, and out of that, 85% was with Government of Ghana securities. So just trying to break down where we started from. We started the year with 133.35 million and then ended at 246.78 million. In between that, I did mention that 38% was coming from net inflows, which is 23.57. And that breakdown is here. You can see deposits was 26.34 million. Withdrawals or payouts to pensioners was 2.77 million. So the investment income, which you can see 40 million, the breakdown is, so the investment income is made up of a number of things. You have interest on call. So on daily basis, any cash balance that you have in your account, Standard Chartered pays you some interest on a Standard Chartered bank, which is your custodian, pays you interest on it on daily basis. And so that cumulatively is about 117,000. So dividends, you have some equities that is listed on the Ghana Stock Exchange. And so on annual basis, these companies, when they do well, declare dividends. And then you are also paid, as in the fund, is also paid as portion of the dividend. And that comes to 1.78 million for the year. The fixed deposits that you have, the government of Ghana securities, the fixed deposits with banks and all that, the interest that you earned on it for the year came to about 39.97 million, which you have here. The CL that you see, we call it capital loss. So the equities that you hold, their prices change on daily basis. For instance, if you buy equities or shares in GCB, let's say you buy it at 2 cedis. At the end of the year, which was 2021, it had moved to 5 cedis. However, by 2022, depending on whether people are seeing anything good in GCB or not, or generally the market is down, you find that the price might go up or come down. In this case, the prices came down, and so you see capital loss of 1.82. We usually will say that this is unrealized because we've not sold those securities. And so as long as you hold it, those things will reverse this year. And we have seen that reverse this year, which I'll show you in the 9 months performance. Fees, which is made up of the fees that you pay to the fund manager and the custodian, came to 1.84 million. And that is just the breakdown of where we started the year from and the things that contributed to the growth for it to end at 246.7 million. This is showing you the breakdown from the beginning of the fund. So last year was 10 years. Is that it? So 20 years. 2002 to 2022, that was 20 years. So we started with 1,005 cedis. By then that would have been 15 million at the time. And so if you look at the growth from 1,005 to the 246 as at the end of the year, we say that about 41% is coming from contributions and withdrawals from people, as in members like you. So the contributions, the monies that are deducted minus any payments that we have made, that comes to 101 million. And in terms of gains that you have made on the portfolio, that is 154 million. And that translates to about 59% growth for the fund. We're just trying to put all the figures I have mentioned in percentage terms. We have said that, so if you look at it from the last 10 years, 2013 to 2023, 9 months, what you can see is that the purple line looks at the depreciation of the currency. Here we are comparing the performance of the cedi against the dollar. The gray line looks at inflation, how prices are changing on daily basis or on annual basis. And then the benchmark is what the board holds us to as fund managers, whether we are doing well or not. The green line is showing the GMA fund's performance. You can see that out of the 10 years, we've outperformed all the indicators in 6 years. Particularly in 2022, you can see that we did underperform the currency depreciation, which is the purple, and inflation, which is the gray. And that is because we all know what happened in 2022. For this year, we are outperforming all the indicators with the exception of inflation, which we all know what the reasons are. So just to give you a high-level summary of 2023, because this gathering is basically for 2022, but just for you to know where we are as at the end of September 2023. So from the beginning of the year till now, the fund has grown by 39% from December So September ending from 246 million to 343 million. And that, the breakdown of that, 83% of that is coming from net investment income, and then 17% is coming from net inflows, which is the contributions minus the withdrawals. In terms of performance percentages, you can see here, that is the performance of the fund, 31.02% as compared to the benchmark of 20.3%. And largely, that is coming from the gains on the fixed income portfolio, partially the performance of the securities themselves, and also as a result of the debt exchange. But as we go on, I think the last slide, I will show you what exactly the debt exchange did to the fund. Okay, I wanted to touch on the asset allocation, but I think Nate did touch on it in terms of where we are. So I'll just move on to the breakdown of the AUM, the assets under management. So we began, like I mentioned, with 246 million, and we are currently at 343. Out of that, net inflows is 16.7, which is made up of deposits of 20.24 and then withdrawals of 3.49. In terms of the breakdown of the investment gains, like I mentioned, interest on call, about 176,000. Dividends we have received from the shares that we hold this year comes to 1.33. And then interest income is about 36.05, but that is for the 9 months so far. I did mention capital loss in the previous one to show that prices of the securities or the shares that you held as at full year had declined. As at 9 months, that has grown, or it is now positive. And so you can see that we've made about 5.26 million from it for this year. And that is because generally the market is up. People like us are all looking for alternatives to break away from or diversify away from Government of Ghana securities. And so a lot of pressure or a lot of activities are taking place on the markets. And that is what you can see there. You can see something like GADU. That is gains from the alternative debt offer. So that is the 38.59 that you see. So that breakdown, let me give it to you in the table, because if I do it here, you might be confused. The fees that we've paid so far is the 1.57 million. Okay, so this is a very high level summary again of the debt exchange. Nate did mention, so for the very first one that was announced in December last year, which the pension funds were exempted. If we had participated in that, I don't think we would have seen these gains that we are seeing. But the last offer that was made to pension fund managers, which NEC together with the board took a decision on and we participated in, this is what it means to the fund. So when we say average terms to maturity, before we did the exchange, what we mean is that all the securities of Government of Ghana that we are holding, it should have taken 5 years. It would have taken us 5 years, 5.44 years. So 5 years, 4 months for us to be able to, for everything to mature. Now with the debt exchange, that has dropped down to 4.5 years. So then it means that we even have, the securities will mature much earlier. And if the environment is right, you will end up reinvesting to get some gains. When we say tenor range here, it's just trying to put the 5.44 into years. So the securities we had were going to mature between 2023 and 2039. Now with the debt exchange, 50% is going to mature in 2027, and then the other 50 in 2028. The average rated interest rate is basically what the coupon is, or the interest rate that was on that portfolio. Before the exchange, that was at 20.29. After the exchange, that is now at 23.57. One will ask, so then what is the benefit of this to the government if you are coming to pay me more than what you were paying me? What is really the, if you look at the whole thing that was done, in terms of the benefit to the government, especially for the pension offer, what it really did is more on giving them room for 2023, 2024, 2025. They now have some room because there is no maturities, immediate maturities for them to pay. So then they can work harder and harder for them to be able to make up for the 2027 and 2028 if nothing happens. So that is essentially for the pension funds. But in all, so the securities that they had eventually was going to mature within 3.1 years. Like 3 years, they should be able to cough out over 50 billion for them to pay out, which wasn't going to be possible. Now with the exchange, because most of the securities were held by the banks who got securities as long as 2038, that has now widened to about 9 years for them. So that gives the government some room for them to be able to pay. So even though for the pension funds, they are going to pay them more, for them, it gives them some room in the immediate term for them to be able to turn things around. In terms of cash flows, so cash flow here, what we are looking at, or what we typically will look at is the maturities that we see in a year. For 2023, for 2023, we're going to receive about 65.03 million, but that will mean that we'll need to reinvest it. But based on the exchange, that is now about 31.25 million, and that is going to be the case for the rest of the years, so 2028. And so the table here is just showing you the actual gains computation. What we had, the securities we had was 194 million. When they did the exchange, so they gave us more in terms of the face value. And why did they do that? From March, they did not pay any maturities or any coupons that were falling due, which meant that from March, we were still accruing some interest on daily basis, but that wasn't being paid. Now, for us as analysts, our job was to be able to compute whether when we compare the extra money we are getting from this face value, is to be able to pay us the coupons that we have accrued from March to September when they were doing the exchange. And that was the exercise that we did. So you can see that there was some interest received and interest accrued from March on the security. So you see this interest receivable, that's what I was talking about. From March to September 4th when we did it, that was what they needed to pay us back, 18.95 million. Now that has all been converted into this extra face value, and then we did receive this 15.4 in August in cash in form of coupon payments for the new securities. So now when you sum what you had, everything including the interest they should have paid you and the interest you would have accrued from March to September, that comes to 220.96 million. Please, this is just for the government of Ghana and the ESLA portfolio. It's not the main portfolio. You realize that I said that this portfolio itself is about 347 million. So if you compare that to the monies or the face values that we received and the money in terms of the coupons that we received, everything came to 254.37, which means that we did gain about 33.4 million through the exercise. So that is just to tell you, these were some of the factors that the board and NEC did consider for us to be able to participate in the exchange. So this is just giving you an idea about what the cash flows will be looking like. We did, like I did mention, we did receive about 15 million in August. In February. No, sorry. In August, we did receive that. For February and August, that's another year, which is 2024. what we are expecting is about 31 million. For a fund like the GMA fund, you did see the deposits and withdrawals that I showed in the previous slides, and you are always having a lot more deposits than the withdrawals that you are paying out. So this wouldn't have too much negative impact in terms of the amounts that we are receiving on your behalf on annual basis. But this is just to show you what we are likely to be receiving. And then my needed mention about reinvestment. So what we are saying is that you see in February 2027, should we receive this amount, it means that we'll have about 145 million that we will need to invest. And depending on the environment, that could impact the fund. But hopefully with our decisions that we are currently taking, what we are looking to do is that we are monitoring the market. If we see the opportunity, we'll try to reduce this exposure before 2027 so that we try and move things around a bit and have an equal split around the different years that we have. So with that, I think I'm done. So thank you.
Thank you very much, Data Bank. Thank you for the 2022 report of the fund manager. And I'm sure you'd be having many questions. But can you put the questions together and we'll take one last report and then we'll come to the questions. But there were just some things that were clear, that the GMA fund has outperformed all notable indicators in 6 out of the 10 most recent years. Shall we clap for ourselves? We've done very well. And then that which is even more profound is the fact that except for inflation for 2023, they've outperformed every indicator that has been set for it as a benchmark. Shall we clap for that as well? As for inflation, it is only the finance minister who can bail us. So for that one, let's leave it for them. So we'll take the last presentation and then we'll move to the questions. And this presentation is going to come from the fund custodian. They'll give a report of what assets that the GMA fund has. Let me put some clarity again. Data Bank does not hold any of our money. They don't hold any of our certificates. They don't hold even a pen for GMA. The only thing they do for us is that they advise us how to invest the money. And once we have invested the money, whatever we have out of the investment, we give it to the person we call the custodian. And the custodian for the GMA fund is Standard Chartered Bank. We are going to take the report for 2022, and this will be done by Nanabeyin Wood. Shall we welcome Mr. Nanabeyin Wood? You can do better for them. They are the ones keeping the 343 million Ghana cedis that the GMA fund currently has. So shall we put it better and louder? All right. Thank you very much. And thank you, Nanabeyin.
Thank you and good afternoon. For our report today, because we see the members once a year, we'll first look at the value add that we provide to the fund as your custodian before we confirm your assets. So one of the very important roles that we play as your custodian is the safekeeping of your securities. And we have a dedicated CSD account that holds all the investments of the fund. So all your equities, your government bonds, your treasury bills, and your corporate bonds are held on the depository on your account. And for the other securities that are not held on the depository or the CSD, we always follow up and ensure that certificates are received for these investments. Your assets are never released without the valid instructions of the board. Another important role that we play is the assets reporting. So on a daily, weekly, monthly, quarterly, or annual basis, we provide a report to the fund administrators and then the trustees. At the end of every month, we have a monthly reconciliation with your fund managers before we confirm the values with the administrator. At the end of every quarter, we have in-person meetings with the board where we account for these values. We also meet every year, like we are doing now, to confirm your positions with you. All this we do to give you the assurance that your assets are safe with us. Another role that we play is the servicing of your assets. So as a result of you holding securities, there are certain benefits that accrue to the fund. We always step in to ensure that as and when these benefits are due, the benefits are received and credited to your account accordingly. I'll give you two examples. So because you have government bonds, there are periodic coupon payments that are paid. We always follow up and ensure that these coupon payments are duly received and credited to your cash account. And then when your initial amount that you invested matures, we also follow up and ensure that your initial investment is received and credited back to your cash account. For your shares or equities, anytime there's a declaration of cash dividends, we ensure that the issuer has paid you and your cash account has been credited. When the issuer decides that they are not going to pay cash, but they are going to give you extra shares, we follow up and ensure that the extra shares are credited to your CSD account. Another important role that we play is cash management. We all know that cash is king. And one of the main reasons why we are all members of this fund is to ensure that at a point in our lives, the fund will give us some cash. Standard Chartered Bank ensures that there's a system in place to receive your monthly contributions and account for these contributions. We make the funds available to your fund managers anytime there's a need for the funds to be invested. All these investments are done only after the board gives us the approval to do so. And when there's a need for us to pay you any benefits or withdrawals, we also have a system in place to manage these benefits payments. The last service that we'll touch on today is investment. Like our MC just said, we do not invest your funds, but we provide a platform for the fund managers to invest your funds both locally and internationally. And again, that is only based on the approval of the board. All this is done around a robust risk framework to protect your assets with us. Finally, I would confirm the assets that the fund has under our custody. As at the end of last year, that's December 2022, you had a total of 254.6 million cedis under our custody. And as at the end of September 2023, that is this year, you had a total of 345.4 million cedis under our custody. We confirm that these values have been reconciled and confirmed with the other service providers. We have already shared the CSD statement and the FD certificate for all the other investments that are not held on the depository. You would realize that there are differences between our values and the values of the fund managers. And that is because the fund managers amortize their values. Thank you very much for your time and for having us. And we really cherish the relationship.
Thank you very much, Mr. Wood. Shall we put it better for him? They are holding over 350 million Ghana cedis. GMA fund is even more than a bank now, and we should be applauding ourselves. So thank you very much. Would want to go to the Q&A with permission from Chair. Would move to the Q&A. Shall we have some people support us with the microphone so that we can pass it around? And just to remind you, the only way you can say that you took a decision in this room is by making sure that you have written your name as an attendee in this. So if you have not written your name yet, can you put up your hand so that would notice them? Gloria, can we get the list go round? If you have the list stuck at your place, can you pass it round, please? All right, thank you very much. It would come. So we'll take the questions. Dr. Chair, if you don't mind, I can moderate the taking of the questions. So we'll have 1, 2, okay, 2, 3, right. We have a part 2 of the program, so if we can be very brief in our submission, so we can close early. Thank you.
Thank you very much. First of all, I want to congratulate the outgoing fund managers. They did a human's job. I also enjoyed your reports. So it sounds like a Bank of Ghana report. You painted a very gloomy picture about the global economy from that was something around the globe. And then based even on that, we as a country,
Send the mic closer to your mouth. We are not hearing too well.
Globally, we have an economic crisis going on. Yet you managed to do well in terms of the menu of the fund. That's a plus. But my question is, there are some few things I want to know. You withdrew three what do you call it? Three investments from a local institution in Ghana. One of them was a palm kind of a production company. Yeah. You didn't tell us what accounted for those what do you call it? A portion of investments, or what do you want to call it? Because termination of those contracts, we think that we need an explanation for that. Yes, you managed to prevent our funds from being taken by the DGE, which is good. We want to recommend you on that. And then there's no both domestic forces and external forces in terms of the economic crisis. Hello.
Yeah.
Yeah. So and currently as it stands, you know the global economy is not good. And then there are thoughts of what's investing offshores. You should look at the risks involved, both the local risks and the external risks. You have to look at it very carefully before you can push money into offshore investments.
Okay, thank you very much. Can you run up, please?
Please, not done yet. I want to point out this. You mentioned that we don't contribute we have no control over inflations. We have a lot of control in inflations because we give our money to banks and other institutions to invest, and people take those as loans and borrow on loans. Most banks make over 100% profits, on loans. The smaller unions that we find the financial institutions make over 200% as loans.
Yeah, Doc.
All right, thank you.
Can you go straight to the question?
I'm coming.
The preambles, we all understand it. So ask the question.
That's if you are giving we have a what? About 1.82 million. Can we reduce our contribution to inflation by also having a credit union where we can also borrow from you, maybe at a lesser rate?
Okay, so the question is that can we have a credit union?
Can we have a credit union?
Thank you.
All right, thank you very much. Shall you? Hello? Can you add your name for the record? So when you get the microphone to talk, kindly mention your name and then you can add your
My
facility
name
for
is
them.
Dr. Sadat Bugopi.
Dr. what?
Sadat. Okay, I'll stick with the Sadat. Right, that's fine. Shall we have the next question? And please, there is a part 2 of the program which would address some of the things he has even raised. So if we can be very brief and direct to the questions. Thank you.
Thank you, Dr. Atin Mensah, Ashanti Division.
Dr.
Atin Mensah.
Atin Mensah.
Yes, Atin.
Okay, Atin.
This is just a clarification from the fund managers. And if you look at page 11 of our report, the booklet, you realize that the portfolio at the end of 2021 was 192.39 million. In the report, I don't know whether the slide can be shown, but I saw 133 million from what the fund manager reported. So if you do an addition of the net income from the investment as well as the net cash flow, it doesn't sum up to the 246. The custodian has also agreed that it's 246. So we want to know are we having less than 246 as according to the fund manager, if you do the correct calculations, or there was a mistake, or there are some thing that didn't come up because they had 133. I wish we could show that on the slide, or if they can explain to us what that means. Yes, thank you.
Okay, thank you. Fund managers, please take note of the first thing. Yeah, shall we have the third one?
Thank you. I'm Dr. Simon Seb, is the Eastern Division. I just want a little clarity on the debt exchange program. We were expecting some amount of money from our coupons, right? But we didn't get the total amount that we were expecting. So I just want specifics. How much did we lose based on that? So that we know the exact amount that we lost. That's all I want to know. Thank you.
All right, thank you very much. We'll go with this round, and if there are any additional questions, we can prepare them. So if we got them right, Sadat, you were asking about the withdrawal from the local investment. Yes, so chairman will take that one. Okay. And then there was also looking at the risk of investment offshores, if I got the two important things. So the fund managers who advise us, you can tell us that. And then from acting Mensa, the disparity in the calculations, the fund managers will address that as well. And then finally from Dr. Osei Mensa, you'd want to know how much was lost from the coupons expectation with regards to the DDEP, if I'm right. Okay, the fund managers would explain that one as well. So kindly.
Okay. So I think I will try to explain the reason why we let go certain securities. We have an investment committee, and as part of the things that they look at the highest value that a stock could get to. For those of you who invest in stock, see that it rises, it peaks, and then it comes down, then it goes up, it comes down. So for those that make a lot of money from stock, what they do is that they watch the stock. When it gets to its highest peak, then they sell. Then when it falls, then they buy. So this is what we did in the case of Bob Total and SG. We looked at the figure, the value, and we realized that we've gotten to the stage that we were not getting any gains. I mean, if you see, we have something we call unrealized gains or unrealized losses. You can still hold on to it, but it's only a matter of time. It's going to depreciate and it will become unrealized loss. But if you are smart, you can sell it and you wait for it to come down so that you can buy. And that's what we did. And that's how come those shares were allowed to go. I hope that explains or that settles the question that you asked. I think for the others, I will let the fund managers and the custodians to explain.
Okay, so before the fund managers come, there was also a question whether we can have a credit union. So if you look at the environment, we are limited in many ways now in terms of the economy, where to put some money. And I know some discussions have been in the background. The current board has met different groups within association. So it's going to come up in a discussion after I step down. So the new chair will bring up that discussion on the question that you raised. Can we have a credit union? It's on agenda, so it will be discussed in full. Yeah, thank you.
All right, so we'll have the fund managers give some responses.
Okay, I think for the beginning of the year for 2022, which will mean that the closing for 2021 financial year, the AUM is about 185. And indeed, in terms of the computation of the change, it's 185 that was used. So the 133 that we're seeing there is a mistake. But in terms of the growth and everything, that adds up. If you look at the 185 and the 246, that actually adds up. There was a question on what you lost in terms of the debt exchange. So if you look at what I mentioned, that you had about 18 million from the March ending to September, that the interest wasn't paid. So what you would say is that assuming that that interest or that amount was invested, let's even say that it was at 100%, which is obviously cannot be the case. You would have earned 18 million. Let's say you even got 100%, but that is not the case because treasury bills for 91 days is around 30%. If you look at 30% and 18%, you should be doing something around 5.6 or something million in terms of your additional interest that you would have earned on the principal. But in this case, you did get 33 million. And so even if you look at the opportunity cost for bond, you will still be better off with the exchange. Please, my last slide. No, last but one slide. Okay, so here, I did mention that if you look at the second table, row 3, column 2, you can see that the interest receivable, which means that the interest that we had earned, but it wasn't paid from March to the 4th September that we did the exchange, that came to about 18.95 million. And that is what I'm saying, that assuming we had even invested that at 100%, which obviously we are all in Ghana, and so we know that is not the case, it will mean that you would have gotten another 18.95 in terms of interest on that 18.95. That is stretching it, really stretching it very hard. But if you compare even that 100% to the gain of 33.4, you are still making a gain because assuming you had invested your 18.95 as 100%, you would have gotten 18.95 million. But in this case, you are getting 33.4 million. Please, that is explanatory enough. No, please, you did not. So in all, you made a gain, assuming you had even invested your interest, you had received the money and you had invested it at 100%. You would have still made some gain between 33.4 and 18 million. Thank you.
Thank you very much. We'll go for the second round of questions and then we'll end this session and move to the next session. Any additional questions? Okay, so I've been informed that because we did not lose money, we are not interested in many more questions again. So shall we clap for ourselves for that bit of it? Yes, and thank you very much, Chair. We'll move to the next bit of the program. Yes, and at this juncture, would excuse the old board. At this juncture, would want to excuse the old board, but before they go down, would need to adopt the annual report before the auditors, and then it becomes a working document for us. So we'll defer that to membership. Can somebody move the motion for the adoption of the annual report and then a seconder, and then we do that? Yes, I see Professor York's hand. Okay, so Professor York so moved and then seconded by Dr. Lomoti. Right. Thank you very much for the report. So thank you, the board. Yes, please, you can proceed. Thank you. But the chair remains because it's still part of the No, it still remains there. Yes, immediate past chair, you are part of it. So please sit there. Right, thank you very much. Shall we clap? There's then the fund managers and together with the custodian wants to take leave of us. Chair, if they can proceed, Dr. Bando. Yes, please, you can proceed. Shall we clap for them for coming over to support us here? So whilst we transition into the second part of today's agenda, I equally see a huge transition from the pelvis to the human brain. And in that, our former chair, Dr. Randolph, a renowned gynecologist, is handing over to a brain surgeon. And that ushers in the transition from the pelvis to the brain.
Okay, you see, at this point, let me tell you something. God created two powerhouses in the body. One is in the skull and one is in the pelvis. And the two of them cannot be active at the same time. Whenever one is active, the other one should go silent.
Thank you so much for your elaboration. Shall we together? Okay. So we'll have some proposals on investment done by Chair Dr. Dixon Bando. You'd recall that just about a week or two ago, we engaged some constituents of the GMA fund in explaining to them what we intended to do. This is the annual general meeting of the fund. We'll bring those proposals here and then would factor the way forward with regards to further investment. But before we welcome Chair to do the presentation on the proposed investment, that which struck me very much so is what would happen in 2027, barely some 4 years from now, when they would be returning to us over 140 million Ghana cedis of our coupons and the real investment. What shall we do with all that money? One of the things that we'll do with all that money is going to come out from the chair. Shall we welcome the chair to give the proposals? Thank you very much. Shall we do it better? Thinking how to invest over 140 million is no joke. So let's do it better for him, please. Right. Thank you. Thank you.
So thank you very much, Dr. Akon. Thank you very much, my immediate past chair, Dr. Randolph, who continues to be a wonderful resource for we, the board members. So about a year ago at a similar AGM, we were handed over the reins of governing the board of the fund. And let me just be quick to say this fund was set up some 20 odd years ago, to provide supplementary retirement benefits for members going on retirement. And through the actions of successive boards, Prof. Edu-Jemfi's board, Prof. Hesse, the late Prof. Lanchru, COPA will see who served on the board at a point, and then my current immediate past chairman, Dr. Larson Randolph, we have kept true to our commitment to provide supplementary retirement benefits. And I'm happy to report that this year we paid out about 1 million Ghana cedis to an individual who had gone on retirement, 1 million Ghana cedis, which is commendable of the efforts of successive boards. Now, the lessons from last year, yes, one person had 1 million Ghana cedis as pension payouts, Now, the lessons from last year going into this year has taught us that the traditional investment options that were available to the board, we may need to reconsider some of them. Now, traditionally, what we did was put our monies in Government of Ghana securities, put some money in shares and so on, which was really investing in others. What this board is asking us as GMA members to do is to open up to the possibility of investing in ourselves as GMA members. Now, when we look at the concept of return of investments, what we are usually looking at is nominal returns to the portfolio of the fund. How much money in terms of percentages, how much money in terms of nominal value the fund is making as a result of our investments. But what we as a board is seeking to do with the help of membership is to expand the concepts of return on investment, so that rather than just looking at how much money is pouring into the fund as a result of our investment activities, what we are considering is investing in projects that will have a direct bearing on the everyday life of our members, so that in addition to the traditional investment holdings we have, we want us to open ourselves to the possibility of investing in projects like the revolving fund, which my directors are going to talk about, projects like real estate investment tailored towards doctors, probably starting from the residents group, because they are the ones who are primarily in need of accommodation when they come to the main campuses for their postgraduate training. And something very dear to my heart, the health insurance fund, which current GMA executives are working on. Because what we are looking at is that beyond the monetary gains we make as an association, we should be in a position to care for each other. So that if somebody needs dialysis, with the support of the GMA fund, working through the mutual fund, for instance, we should provide assistance to our member. If somebody needs brain or spine surgery, for instance, again, through the same channels, we should be able to provide support to the member. So in addition to the traditional investment options, we want members to be open to the possibility of we doing things that are not necessarily mainstream, things like the revolving fund, things like the real estate investment, things like partnering with actors in the private sector to invest in diagnostics, for instance, which in addition to providing monetary or nominal returns to the fund, will have a direct bearing on the lives of members. So this really is the new thinking of the board. And I'm certain that working in concert with the executives, working in concert with our most important stakeholders, the members, we are going to carry these through. And let me be quick to say that we are open, to suggestions from members as to what you perceive to be an investment that will be of value to you as a member of the association. And then based on, analysis, based on cash flow projections, based on the fact that such an investment will preserve the value of the fund, which is our cardinal activity anyway, we will work with you to make that dream come true, all in the interest of our association. So we are going to have two presentations. The main ones were done at the webinar session we had with members, I think a week or two ago. So these are going to be essentially highlights of the discussions we had with the members in the past 2 weeks to give you a more refined, product offering of the thoughts we had. And then afterwards, we have a conversation on how we can make some of these things happen based on acceptance from members, and we will move on from there. So the first will be from Mr. Edem Nutako, who happens to be a seasoned investment advisor, a businessman, and a key, director of the fund, who advises us on a daily basis on some of the investment decisions we make. So beyond the investment advice we have from our fund managers data bank, we have our own in-house investment team, and Edem happens to be a part of the team. So what he is going to take us through in the next few minutes is the concept of the revolving fund, where we are aiming to give, if you wish, very low interest rate packages to members, to shore up the immediate financial needs. So Edem will take us through that presentation. Thank you.
Is it okay to say good afternoon, good evening? Okay. It's 5, so I guess good evening is in order. I'll just be brief in my presentation. As Chair has mentioned, there's what we call the GMA revolving fund. The GMA revolving fund. The essence of this fund is to ensure that we diversify the asset classes that we traditionally invest in, and at the same time ensuring that members enjoy from the scheme not only at retirement, but when they are in active service as well. So there are two-pronged approach in or objective for setting up this revolving fund. Now, as Chairman mentioned, a lot has been said on this revolving fund at your meetings or webinars. Now, with all the benefits that you stand to gain, the big question is, how do we access this package that is being offered to members? The first thing is that there's going to be, you can only enjoy when you apply. And that process will begin with an online application. So at the most opportune time, the platform through which you would have to apply will be made available to members, and then you can apply. Now, when you do the application will go through what we call a validation process. And that validation process would be marked by some conditions precedent. So, for example, you must be in good standing with the mother body, which is GMA as a body. You must have contributed your dues to the mother association. And at the same time, you must be seen to be also contributing to the fund. Once those criteria is passed, you are deemed to have fulfilled the conditions precedent for your application to be considered. If you do not, or if you are in arrears with your dues to the mother body, your application will be declined. And if you are also not contributing to the fund, which is a GMA fund, your application will be declined or will be terminated. But once you fulfill these two conditions, then you will be qualified to continue with the next phase of the application. Now, once you fulfill this, the next thing would be to look at your affordability. So granted you are applying for a certain amount. If we look at your income and then look at how much you should be paying or how much allowable space you have, which is to say that you have up to 40% of your income towards payment of any amount you have borrowed anywhere. Once you fall within that range, obviously everybody will not have that 40%. Your allowable or your affordable range will determine how much you would be given. And if your affordability is way lower than how much you applied for, the application will be returned to you, or you'll be communicated to as to your affordability, bracket, so that you can resubmit for the application to go through. Now, once you fall within the affordability range, your application goes through the approval processes, and then once it's approved, within a week, your account will be credited with the amount that you are asking for. So it's a very simple process, and this is how we intend to go about it. Now, in disbursing these facilities to members, there are basically two main product offerings or packages under which we want to disburse these facilities to members. The first has to do, then we call it the personal loan. So persons who have low affordability, persons whose affordability ranges are lower, they fall within the personal loan category. And then there's the personal loan plus category. Those who have very high affordability, they fall into that category. Essentially, these are the features of the personal loan category. You must have contributed to the fund for a minimum of 3 years. A minimum of 3 years to qualify. And you must equally be in good standing with the mother GMA. You would be entitled to a maximum of 50,000 that per some calculations or some simulations we did. Those that fall within that category, we envisage that the maximum amount that they could take is about 50,000. But once you are able to, and you must have contributed to the fund for a minimum period of 3 years. So the more period you have contributed, the more you would. For those, now your contribution in the fund will be used as a lien. So once you take a facility from the revolving fund, that your contributions in the fund becomes more like the security. In the event that you default, then we will take your contributions to the fund to offset your amount that has been given to you. Now we intend to, like Chairman said, our pricing is going to be at the rate of 23%. 23%. If you go to most of these traditional banks, they are lending at 38%, in some cases 40%. But when you come to the GMA revolving fund, we are looking at a price of 23%. And 23%, I'm sure the explanations have been given. So, sorry. Okay. Like Chairman mentioned, the assumption behind this rate is that assuming the fund were to invest in a fixed deposit instrument, what will be the rate of return to the fund? Assuming the rate is, say, 18% or even 19%, that return must be seen to be accruing to the fund. So if that money is being given to you, that return, the fund cannot suffer because we are putting up a package that, as it were, extends facility at lower rate to members. So the fund, it takes care of your investment income when you go on retirement. But at this moment, in this present time, you're also being afforded the opportunity to take a loan at a lower rate compared to if you were to go to the bank to borrow at, say, 38%. So it's a win-win for both the fund and to you, the individual. And the turnaround time, within 1 week, nobody is asking you to go and bring your grandfather's property to come, and all of those things would not be in here. The same features apply to the personal loan plus, except that with the personal loan plus, the minimum duration you should have contributed is 10 years. And then you can draw up to about 100,000 cedis from the fund. Every other thing remains the same. Now, this table here basically is just to give us a fair idea on how much we would have to pay, assuming we took certain amounts. So, for example, if we were to access about 100,000 at the rate of 23% for a period of 6 months. To be the repayment amount for the 6 months. If you are to take it for 12 months, okay, so if you access 100,000, you pay 18,500 18,500 for 6 months. For 6 months. For 6 months. Yes. If you take it for 12 months, your repayment value reduces to 10,000. And if you take it for 24 months, which is 2 years, your repayment is 6,000. If you take it for 3 years, your repayment is 4,600. So depending on your ability, we are giving you up to a 3-year window to pay back. So you choose that, okay, the money I am taking, I can pay in 1 year. I can pay in 6 months. I can pay in 2 years. Then the repayment value, we will check that against your affordability. And then that will just, if you take as low as 5,000, for 6 months, you pay 929. And for 36 months, you pay 235 Ghana cedis. So depending on the duration you want to take the funds for, that will determine how much or your repayment value. Next slide, please. Now, having said all of this, when do we intend to implement this welfare or revolving fund? Hopefully, if everything goes well, we intend to start in the first quarter of 2024. Thank you very much.
Thank you very much, Mr. Nutako. Shall we have the second presentation? Please let me consult my chair. Okay. Would the motion follow or take this one? All right, thank you very much. Chairman says that we'll take the questions on this particular one because I know it's of interest to all of us. So, yes, I can see plenty hands up. You know, for you to be called, you must catch the eye of the speaker. I'm the one speaking now, so make sure you catch my eye. Oh, I'm the one speaking, so make sure. Well, chairman has given me those powers. If I don't see your hand touching the roof, you can be sure that I'm not going to call you. Okay, so let's take the questions. Would come from this order, so it'll be easier to handle. So 1, 2, 3, 4. We've done 1 pound. All right, shall we get the microphones to them? From the other end. Please mention your name and your division so that we can get the records right.
Good afternoon. I'm Yao Subrani from the Ashanti region. So, my question to Mr. Nutako is, looking at the interest rate, I was wondering if it's going to provide help for the members of the association, and it's something that's going to be taken from our own fund. Why not consider reducing the interest rate to about 15 to 19%, to cater for inflation? That's for the first part of the question. And the second is, Why 3 years? Because you mentioned that you should have contributed enough funds to the fund, but some people like us who have barely struggled through medical school and are receiving their salaries and would want to apply for this package would be disadvantaged, because if you're looking at 3 years, that would mean they would have finished 2 years of house job and would be a medical officer before they'll be viable to apply for this package, which would be unfair.
Hello. Shall we allow him to finish his question? Hello. Okay. Ameya, please finish your question and be very fast so that they don't interrupt you further.
I would want your take on that, because GMA is for every doctor. That's the understanding I got from the beginning of this conference. Thank you very much.
All right, thank you. Shall we have the next person?
Hello.
Shall we listen to the question?
My name is Bernard Nitogo, Greater Accra Division. Thank you, the trustees, for thinking about other ways of increasing the fund. I think this issue has come up several. However, my question is, you are guided by the trust deed. Can you help us with the sections of the deed that help you to start a revolving fund? Thank you.
Okay, thank you very much. Question clear. Shall we come to
Yeah, I'm Ishmael Che, Ashanti Division. I have two questions. The first is, which portion of our fund is going to be used for this revolving fund? Is it the cash element, the government of Ghana bond element, which will be monetized? I want to know that, number one. Number two, how is the fund's return? Vis-a-vis, as it is now, we know our return, how it's doing, how the fund is doing. How are we going to protect that value? Because 23% is what I saw. If the return from our current investment is, say, 50% in 2 years, and half of our fund is into this revolving fund, getting 23% interest, how do you hope to bridge that gap between the funds? This 23%, I'm sure it's based on the current returns. How are we going to protect the fund in case the returns from other things go up? Thank you.
Thank you very much. Question clear. So I thought there was one. Yes. Okay. Yes, please.
Thank you very much. I think in a way, I have some of my questions asked by
Please, your name for the record.
Lawrence Osei Tunyamikese, Ashanti Division. Osei Tunyamikese, Asasura, Baminika Pre. So one of my, I'm a bit quiet because one of the things is what Bernard asked, and the other is whether Mr. Nitako can show us whether we have that kind of resilience to be able to withstand any kind of shocks. If, for instance, X number of people come in for the loan and we are giving it at such an interest, we are all doctors. What if they do not pay on time? Does that not weaken me in my most, vulnerable time when when I cannot work hard enough? That's one. The other question was, does age matter? Say I'm 59 years old and I come in for a facility, 100,000 cedis, and say I'll pay it over 5 years. What does that mean? Because at 60, I'm also coming for my retirement benefits. Thank you very much.
Thank you so much. Questions are very clear. Would come for the second round of questions. So, Dr. Lomote, the speaker has noticed your hand.
There's a lady on the back. After Gladys.
Yes. Yes. So as to the second round of questions. So this one, the whole board would try and answer some of them. If I have anything to add, I'd also add. So just a quick reminder of the questions. If so Ameya was asking essentially about the reduction of the interest rate in the revolving fund to about 15 to 19%. So you need to explain why you cannot go there. And then asking why the waiting period must be about 3 years, if I got you right. Okay, then my friend Togbo was asking the sections of the fund bid that would allow us to invest money in a revolving fund thereof. And Ishmael Che was also asking which portion of our money would be invested in the revolving fund, if I got it, whether interest that is coming in or fresh income that is coming in. And then he was also of some concerns as to how we're going to protect the returns of the GMA fund itself vis-a-vis our giving some money of the fund to the revolving fund. Is that what it is? Yes, okay, right. And then Dr. Setitu was asking about the resilience to the fund. I mean, with respect to whether we could withstand some shocks when it comes to non-payment or delays in payment, and then with respect to the fund itself. And then he wants to know whether age matters to borrow from the fund, especially if you're about 60 years and going to retirement. All right, so these are the questions, Board.
Okay. Thank you very much. The first one, which has to do with the rate at which we lending money to members. We acknowledge in our deliberations that this revolving fund we're setting up, perhaps even in the first, second, or even in its third year, not all members would have that edge to come borrow from the fund. But collectively, the money belongs to all of us. How then do you ensure that those who do not come in, or even pay the cap we may have to put in how much we want to start with, how then do we ensure that those who do not benefit from the amount we'll be disbursing in maybe its first, second, or third year, how then do we ensure that the return that they should have in the fund, they get that return? So it's an opportunity cost. So what we are saying is that assuming that amount of money were invested in any of these securities we buy, all of us would have benefited. Now, that benefit is what we are going to give to the fund. We're going to give the money to the fund at a cost. Now, because the fund would also be set up with its own expenses to take care of, we need to also apply a margin that is reasonable so that persons who have knowledge in managing these kinds of loans or advancing loans will also take their salaries or whatever expenses associated with it will have to be paid. So just as we have the GMA fund that have members working or people working at the secretariat, people within this industry will also be employed to work under the revolving fund. So one, the cost, the benefit that would have accrued, assuming we invested the fund in any either a fixed deposit or a government bill, that benefit will still come to the fund and will be shared to all. Okay. The extra bit is to take care of sundry expenses under that structure. So doing all the simulations, we are of the view that when we go by this route, everybody will be taken care of. So in the fund, your benefit will still come to you. The only thing is that if you apply earlier and the amount we allocate gets to you, you will benefit, but others will take turns to benefit accordingly. So that's how we have looked at the structure. And we think that the 23% is still a better rate compared to if you were to go to any commercial bank asking to take a loan and the kinds of things that they ask. So we have looked at all the scenarios and we think that under the circumstances, that is the rate that we can work with for everybody to be okay. Now, the second question has to do with which portion of the fund deed that allows us to do the kinds of things we want to do. Also, the board acknowledges that in order to go on with this revolving fund scheme, there's a need for the deed amendment. So as part of today's AGM and the resolutions we'll be putting before the House, the board will be asking for a deed amendment, which would enable us go through the kinds of things we want to do. If the House feels that it is not necessary and they will not give us the mandate, then it means that this cannot go on. But just to give you some background work, a lot of consultations have been had with GMA Council and then ESCO. And the presentations that we have made to justify why the need to implement this revolving fund, extensive discussions have been had. And we have also, as it were, sensitized members, took on recommendations, and we have put all these things together. So we are the last phase of it, where we have come to AGM to seek mandate to execute it. So I would ask that once the motion is put before the House, let's all give it our thumbs up and we can implement that. I hope I have answered your question, sir.
Right. So let me just take the part about repayment. I think OT had a concern about what will happen to the fund if repayment is not done. Now, as it were, we are going to rely primarily on deductions from controller. That means once you put in an application for the fund, deductions are going to be made from your salary straight from source. And this is being done to reduce the risk of default, for the repayment. And then another member had a question about what it will do to, what it will do to the fortunes of the fund. Now, as at now, we are about 340 million cedis, a bit in excess of that one. With this plan we are proposing, we have capped how much we are going to take, and it's based on the actuarials we have done at 7% of the total value of the fund, no more than 7%. So in the larger scheme of things, we are looking at something about 21 to 25 million Ghana cedis as an investment for this project. Now, the way it works out, the money is not going to be given in a tranche to the revolving fund to operate with. It is going to be released on an as-needed basis. And with the modeling we've done, at the end of 3 years, the revolving fund will be able to pay back the entire amount you borrow to the mother fund with interest, and will have sufficient funds to do onward lending. So this is not a long-term lending plan we are doing for the revolving fund. What we are using now is essentially a startup capital. After 3 years, it will be a self-sufficient fund, so to speak. I think, yeah, so you.
So the other question is, so for if we are going to do deductions at source, say controller, what happens to doctors who work within the private sector. So that what we essentially would do for you to benefit, we must have an undertaking from your employer who would agree to do deductions from source as well. So as controller does the deduction for us, if you work within the private sector, your employer must equally sign an undertaking to do the deductions on our behalf. And that also reduces the risk of default for those who work within the private sector. So I just needed to add that clarity.
So the very last one, if you can take the age, if the age matters. Then.
Okay, so in advancing credit or in credit management, attitude analysis of the applicant equally matters. So beyond you taking money, how is we gather there's a way we gather information on your attitude. So a lot of the time, persons who fall within the older bracket age, integrity and credibility is key to them. And we would have also looked at other sources of income to them. And you know, doctors, you may attain the age of 60, but it doesn't mean you have retired completely from any service. Others engage in consultancy services in many fields that brings them income. Once we do those assessments and we equally do your character assessment to show that you are capable of paying, we will advance those monies to you so long as you are not 60 plus, because once you are 60, you will not, you would have been deemed to go on retirement, and the fund is supposed to pay your benefit to you. And one other thing too is that once you are closer to 60, one of the conditions is that once we disburse money to you, your contributions in the fund stays as a lien. So you cannot take your entitlement from the fund if you have not paid the loan you have taken from the revolving fund. And the softwares have been programmed to communicate to each other in a manner that would ensure that even if you are giving money before the 60 or you still owe on the day of retirement, until you pay, your benefit from the fund will not be paid to you. So these are some of the stopgap measures we have put in place to mitigate the risk of default and non-payment to the fund. I hope I have answered your question.
Thank you very much. And we'll go to the next round of questions. Yes, okay. There's an addition here.
Thank you, Mr. Chairman. A little more clarification on the basis for the revolving fund vis-a-vis the fund deed. I just noticed some small misconception about what the deed allows and does not. If you look at paragraph 3 of the deed, objective of the fund, and with the chairman's permission, I read, the fund as established is a fully funded and privately managed fund to provide members with supplementary retirement benefits, retirement income, and this is where my emphasis is, and other related benefits under the rules and guidelines as below, and shall be operated in terms of the rules. This revolving fund would fall, if it's accepted by members, under other related benefits. So there's nothing in the deed itself that prescribes a revolving fund. Now, 3 mentions rules and regulations. I think that is where the problem is. The operationalization of these broad principles that are in the deed. It is in the rules and regulations that there is some provisions that seem not to make room for the operationalization of such a revolving fund. So that is what my colleague Adam said. An amendment would have to be proposed to allow for such alternative vehicles to be written into the rules and regulations of the fund. Thank you.
All right, thank you very much. Yes.
Thank you very much. I think Dr. Che was asking where the money was going to come from to run the fund. And what we've actually thought through is that we receive disbursements from controller. So we are not going to take money that is with Bank of Ghana or any of our shares. The monies that we receive from controller, that is where we'll start that from. And as Dr. Bando said, after 3 years, based on our projections, the fund will become a self-sustaining vehicle. So we would not need to take any money again from, how do you call it, from inflows from controller or other payments. Thank you.
Okay, thank you. There's still one thing outstanding, which is the why 3 years?
Yes.
Of contribution. If you can touch.
Chairman, would you like to take that?
So one of the cardinal principles of setting up this fund is to create an alternative investment class for the GMA fund, mother fund. Now, what we need to understand is that this is money we are advancing to the fund in the hope of returns, and therefore we must do everything to protect what we are advancing out. So the reason why it was capped, at 3 years is that by that time, one, we are certain that a member may have made sufficient contributions to the GMA fund to be used as a fallback measure in case, and I'm not expecting it to happen, but in case a colleague defaults. Now, the second point is that you may have noticed that for the first 2 years of employment, decisions are made to, for instance, exit the country at the end of second year of house job. Now, we are certain that if you are planning on staying, by the third year, plans would have been made. You would have started a regular income stream, whether from government or from the private sector, to ensure that the funds we advance into a revolving fund is going to be protected. So hard as a decision it was, we felt it was necessary to put some of these checks and balances in place, to protect what we are advancing. Because we must be guided by the overall principle that we are working in all of this to provide retirement benefits to our members. So anything we should do to mitigate the risk of loss to the mother fund, we have to do. So that is what informed the decision to make it minimum 3 years contribution, by which time we are certain that you have a regular stream of income to pay off whatever debt that you may have taken from the revolving fund. So hard a decision as it was to take, and I will tell you that it was a very hard decision, but at the end of the day, beyond the help we want to give members, we should look at protecting the value of whatever funds we are advancing to members. Thank you.
Thank you, Chair. We'll go to the next round of questions.
Yeah, cool. Please let me just add a comment. In fact, the chances of a younger colleague, yeah, Doc, we've noticed you long ago. So after me, he'll call you. The chances of leaving the country even doesn't stop at 3 years. Sometimes it goes on up to 5, 6 years. And even now, I know old doctors, 10 years beyond, who are thinking of exiting. And in those days, I'm not know the situation now, but when you needed people to guarantee your SNIT loan, people did that freely. And many people left the country 2-4 years after medical school, and those people suffered. Look, money is not free, money is not cheap, and therefore even the 3 years, if there's still some risk there. So let's not take it lightly. As a chairman for 6 years, I have signed many times, especially international students who are exiting. If you go into our books, there are people who have left. They contributed 1, 2 years, 3 years. They've left. They are not contributing again, and their monies are sitting with us. Later on, they will not even care about that money because they'll be far better off elsewhere. So, yes, there is risk in this business, and all the questions you ask are legitimate, but putting in effort to make sure the risk is minimized. Look, let us not behave. Some people will default. I'm telling you, you can mark it on any wall. Some of us will default. Some doctors were given cars some time ago and they refused to pay. These are known. So let us not behave like we are all angels. Things will. All right, thank you.
Okay, thank you very much. Just to remind you, money is not cheap, money is not free, but still, Sikam PDD. Yes, let's go for the next round of questions. We'll take from there 1, 2, 3, 4, and then we'll close it in here just to remind the online presence that we have them in mind and we'll come to the online portal. Thank you.
Okay, so my name is Rosemond Kokoro with the Bonahafu Division. I wanted to find out if the team has looked at the affordability again, because what I have noticed is that unless you have a loan that passes through controller, there is no way you can use the salary or the pay slip to check the affordability of people. Because I know people who have acquired loans from the bank itself or from other sources, which doesn't pass through controller. And therefore, when you look at the affordability on the pay slip, it will be high. But when you go to the ground, they have multiple loans they are certificating from. So I think the team should look at this again in terms of using the affordability. My second question is about processing fee. When you take loans from other banks, they will give you, if you go in for 50,000, you don't get a 50,000 because some will be used as processing fee and other things. With this loans that we are going to get from the fund, do we have something like that with it?
Okay, thank you very much. Please, we are running against time, so let's be very brief and straight to the point.
Dr. Hatton Benson, mine is more of a suggestion. In loan payments, we have the affordability, but
please, your name.
Hatton Benson. There's also a credit score. Since it's a fund, why don't we consider tying people's total amount to how much you have contributed to the fund? I think what everyone is scared of is, should people default? But if you default and let's say you have contributed 30,000 and we gave you 30,000, we don't have a problem if you decide to default, because you would have made some 1 or 2 payments and we can still take that money. Or even if we think maybe, because maybe at the end of 3 years, your amount may be small, we can decide to do it maybe 1.2 times how much you have in the fund, as against also your affordability, so that we know that at least the fund is protected, members are also happy. So I think let's consider also the credit score, so that as you pay more, you pay back.
Dr. Mensah, thank you so much. Very clear. Have we come to Dr. Lomuti, please?
Thank you very much. So just to add the contributions and the question as well. Thank you very much. I know that in repayment of loans, sometimes when you're able to pay your loans earlier than the due date, you are asked to pay a little penalty. Are we also going to consider that? And then, because we said we are earmarking 7% of the money, how many people are we going to allow to have a loan, and how often can you borrow, since it's going to be a long queue? Can we put a cap on that? And then also, in the case of demise, and your contribution in the fund is not up to what you have asked for, what happens? We don't wish that, but anything can happen. Thank you.
All right, thank you. We'll take the last person, Dr. Mensah.
Thank you. It's also a suggestion. I think earlier on, GMA had an agreement with EcoBank that they charge the base rate of Bank of Ghana plus 1%. And this also was also okay for GMA members to get loans. Can we try doing that so that in case the rates go up, we still have that base rate there also help us? Thank you.
Thank you very much. Shall we take the responses? Then we'll come to online presence.
Okay, I'll take the last one. So currently the base rate is 30%. There's a lot of calculation that goes into that. They look at inflation and so many factors. So even among banks, if you want to borrow from Bank of Ghana, they'll give it to you at 30%. When it gets to the commercial banks, then they added risk and other factors, and then you are in the region of 35, 38%, as Mr. Nutako said. So please, let's approach it from this angle. If GMA is giving to you at 23%, as was explained, it's on assumption that if we have put this money in government papers, this is what was going to come to us. And I don't think that these values are going to stay static. As economy changes and rates come down, it will reflect. Thank you.
Okay, thank you.
So, Dr. Alomuti, your question about security of the funds, and that will tie in with Rosemond's question. So usually when the loan is being advanced, there's a processing fee, and then there is what we choose to call the social protection fee. So the essence of the social protection is literally for those who, for an unfortunate reason, may default. The social protection, which is a form of insurance, takes care of that part. So those two charges, processing fee and the social protection, will be core components of the money we are giving out. So whatever is being advanced to you will be less the social protection and the processing fee for the loan. Right. And Dr. Hatton Mensah's point is well noted. Thank you for your suggestion.
Okay, thank you. I hope all the first things here have been answered, and then we'll go to online.
I think Dr. Lomuti had a first question. Right. So I think okay.
Okay. So ordinarily, if you were paying earlier with any traditional bank, they charge you penalties. But this is our own fund. So we can decide to waive if it's not a big deal. It's not a big deal. Because ultimately, we want to be able to get our monies back. If you can pay back in good time, all the better. Thank you.
All right, thank you very much. So we have online presence. I see anonymous attendee. No, please put your name, otherwise we cannot address you. Elizabeth Tabitha. A laudable idea. My first thing is whether the GMA fund is the right fund to use for these ventures. Do we want to gamble with people's pension, or we better off using, for example, the staff fund? So that's a suggestion from Tabitha. Again, from Joel Dua, and he's asking if the repayment deduction from controller, that's or bank standing order. I think we mentioned that it is from controller. Then again, is the interest rate for the proposed revolving fund fixed? No, it's not fixed, it's variable. And then Lorna Lati, how will we make sure that doctors come in for loans for educational purposes who eventually migrate, pay back their loans as they will no longer be paid by controller? There are some safeguards, but would listen to Mr. Nutako.
whether the GMA fund is
So more or less, those who come to take loans and they would no longer be available through controller, how do they pay? Or how do we make sure that loans given are retrieved? Or more or less, if there is any insurance, anything around to guarantee that loans taken are made good.
Okay. So as Chairman mentioned, to every venture, there's a risk. We have looked at all these risks, but essentially what we have observed over the years is that for companies that run payroll lending as a business model, hardly do you have government people or people who work for government leaving. Hardly do those things happen. Even that, we have factored that into the modeling such that we provision for such happenings. So in the event that something like that happened, we have made provisions in the fund to be able to shore up some of these instances when they come up. But studies have shown that persons who work for government, for some reason, hardly do you find these people leaving unless they have to, they have opportunities to work outside and they have to go. But majority of the time, sorry. Well, we have factored that also, which is why we make provision for such instances. And again, usually the flight risk is largely with the younger doctors, which is why, like my chairman said, a lot of consideration had to be given to even cap it at the 3 years minimum. So we have looked at all these scenarios, and I believe once we start working, we would know if we have to make amendments to the provisions we have made or keep it at that. It's subject to amendment based on the things we encounter as we move along. Now, the second question is whether the GMA fund is the fund from which we should be drawing money from to do this. My answer to it is that we are not a registered organization that has a mandate from Bank of Ghana to source money from the general public. We cannot go and, as it were, take deposits from people and then come to use it to run this fund. Our best bet is that this is our own money and we are using it to support our people when they are in active service, and at the same time ensuring that the ultimate objective of providing an enhanced pension package for the medical doctor is achieved. So yes, this is the avenue through which we can take money from and to do the kinds of things we want to do.
Thank you very much, Mr. Nutako. At this juncture, we are going to move to a very important part of the feature, which is to ask members of the fund if the board can proceed with the arrangement of the revolving fund. In that, as mentioned, we would need to have a revision of the deed to allow that. So at this juncture, would want somebody to move a motion allowing the revision of the deed to allow investment in the revolving fund. So any member, so please, can move the motion. Yes, I see Dr. Patamie's hand. So you've caught the attention of the speaker. Thank you.
Thank you very much. Motion for amendments of the Ghana Medical Association Fund Rules and Regulations pursuant to Section 16, that is the amendment to Fund Rules. I, Julius Patamia, Esquire, hereby move a motion for amendment of Section 17 of the Fund Rules and Regulations by the insertion of a new paragraph 17I as follows. Without prejudice to section 17, the GMA fund may invest in alternate asset vehicles, including a revolving fund, real estate investment scheme, and such other alternative asset vehicles as may from time to time be required, subject to the approval of members at an annual general meeting of the fund. Thank you.
All right, thank you very much. Esquire, I would not attempt to summarize this one. Right, so would want somebody to second the motion. Okay, I see Dr. Pakwesi Baden's hand up there. We want somebody to second the motion first. Then if anybody wants to speak against the motion, we'll proceed in that order.
So, Pakwesi Badu, MD. It's the reason why I am rising to second this motion is this is something I've been advocating for the past 10 years. In fact, those of you who have been frequenting the AGMs, I kept asking since 10 years ago that we wake up one day and your contributions may not be able to buy you even a bottle of water. And that's where we are now. So we've come to a critical point where we need to diversify our investment. And on that score, I second the motion by Esquire Patamia.
Thank you very much. So Pakwesi Baden, MD, has seconded the motion. Do we have anybody who would not second the motion and for that matter would have a counter motion? Okay, no hand caught. Past Chairman, I'm the speaker, and I was just about to say that I did not see any hand. And indeed, I've not seen any hand because it has not touched the roof. But my attention has been drawn to the fact that Ameya has his hand up. So kindly, if you can give him the microphone.
Thank you very much. Please, the name is Yao Osubruni. Thank you very much.
All right.
I beg to differ with the minimum of 3 years. I was wondering if, in case I was a house officer, and my affordability after my 2 years.
Please just hold on. We are dealing with the motion. So if you have a counter motion other than which has been presented, then you present the counter motion. Otherwise, you'll be drawing us back. So the explanation for the 1 year, 2 years, 3 years, I mean, we can judge or overrate later, but this is a very crucial point at which we would have to take the motion to amend the deed, and which motion has been proposed and has been seconded. So if you have the microphone, you either support it or you give a counter motion because you are not supporting it, and then we can put it to vote. However, if there are no counter motions, then it means that all of us in here agree to them and would proceed as such. So Dr. Yao Bruni, if you can proceed again.
I also, Bruni, move to pass a counter motion for the provisional committee report to be revised, taking out the minimum of 3 years.
No, Dr. Bruni, you see, okay, I'll try and explain again. What is actually happening here is that we have had the discussion, the details of the revolving fund. At this point, the deed, hello, I'll be done in just 1 minute so that everybody can understand. The deed that allows us to invest our money never mentioned that we can use the GMA fund money and borrow or lend to ourselves. But this is a crucial point that we want to do that because of the benefit of alternate vehicle investment for the fund and also the benefits that will accrue to us as members. So we want the permission of members to proceed in that direction. So if it pleases that nobody thinks that we should not proceed in giving money to the revolving fund, then we would have the motion adopted. I've been called by
Dr. Akon, let me clarify a point for Dr. Bruni. So, Bruni, what I understand from your concern is that in principle, you accept that we should have a revolving fund. That is what I understand. Your concern is what appears to be an exclusion of a certain segment of our membership. So now this is an operational detail we can't talk about, but the principle I understand from what you are saying is right. We should adopt it. So what we can do possibly is to probably second the seconded motion that when it comes to operational detail, we can make a representation to the board on how we can include your interest as a member of the fund. So I think that is what you are aiming to do. Right, thank you.
Or they're not interested in the revolving.
Okay,
I am. Interested or not interested?
I'm interested. All right,
Yes.
so then it solves the.
Yeah.
Right.
I see. Yes, so let's not drag this one. Yes, Dr. Afeje will give you the opportunity to speak, but let's move the motion first. And I see that, is there any counter motion? Right.
Thank you, Mr. Chairman. My name is Dr. Sefoga. Promise. Not necessarily a counter motion, just that the Esquire mentioned alternate vehicles, including real estate. I just want to draw attention. We didn't quite discuss that. So are we passing or accepting it as a blanket motion under which these can come on, just so we are clear? Otherwise, we may need to modify it to suit what we have discussed and exhausted and amend it as such. So, yeah, thank you.
All right, so to help my boss, this essentially we have rules governing this fund. And when you look at Rule 16, it talks about amendments of the fund rules. In the absence of that, Section 17, and the Section 17, perhaps you have to read it out for people to get it. Section 17 says stricto sensu, borrowing from the fund. And it goes on to explain that no loan shall be granted. The operative word is no loan shall be granted under this fund. And what this house seeks to do is that now that we have been encumbered, restricted, cocooned, and imprisoned by Section 17, we have to go under the grace of Section 16 to relieve ourselves of this bondage so that we can operationalize our ideas. And so what we're seeking to do is that the final details will come on later, but we have to get ourselves out of this enslavement of number 17, Section 17, that says no loan shall. So that shall must be taken out, and it can only be cured by Section 16. The House, my prayer. Thank you.
Thank you very much. So, on the basis of this, because we do not have any dissenting view, shall we all who agree to the amendment so read by Dr. Patamia and so seconded by Pakwesi Bedin MD say, yeah, 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 Yeah. Motion is carried. No, nobody even rose to speak against it. Okay, those who do not support, shall we hear the name? Okay, motion is carried, and the ayes have it, and thank you very much on that. Yes, online, we didn't make any provision for any voting pattern online. And our rules governing operations or conduct of meetings never took into consideration voting online. So sorry about that. And when we get there, we'll cross it. Yes, Dr. Parkwesi Baden or Parkwesi Baden MD. Baden.
Yeah,
Yes.
thank you for adopting the motion, paving the way for that. But there's something I have to draw your attention to. Though I seconded it, but I think the motion should have been given to the chairman to verify that it's actually dated, timed, and signed. And so we should rectify that. But though we've accepted it. Thank you.
Thank you very much. Would proceed to the next presentation. And please, if it's not anything major, all right, okay. Prof. York, we'll defer to you.
Thank you for the legislative thus far. It's a question that is lingering across this side of, the room about the proposed amendment. Now, when does it take effect? So are we going to wait for next year to see? But we need to see the text before it's approved. Otherwise, if that's not the case, then what we may have to do is probably give the leave to council to approve it when it's ready. So if the House would accept, then we would, encourage council to do on our behalf, so that we don't have to wait till next year to gather again to approve the text before the operationalization of the thoughts. Thank you.
Okay, very much noted. With chair's permission, we'll get everything sorted out, projected here, and we'll move with it, with the date, time, and everything. Would want to welcome the next presentation. Chair would proceed with the next presentation whilst we get this sorted out.
Let me just respond to that. When we go to AGMs like this, and the motion is put before members, the moment a motion is carried and adopted, if the motion takes effect immediately, the operationalization bit is what, depending on the parties that have been mandated to implement, could give themselves timelines to ensure that that motion or that mandate which has been given to the board is carried. So the motion takes effect this very minute. Implementation is left with the board and the parties that would have to carry it. I hope that answers it. Okay, maybe when we are done, the text we can all look at it. But technically, once we all understand the motion and we have agreed that it is carried, the text bit are more operational. We can just look at it and then get it done. Yes. 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 Mm.
I'm just saying that I think
Okay.
That if the council that upon finding the text to this amendment, it's approved at that level.
Okay.
Then we can start working.
Noted, sir. Noted, Prof.
All right, thank you very much. We'll proceed to the next presentation. And Chairman, with your kind permission.
Hold on. So this was behind the one. We can it's not like that. Yes, yes. Let me see.
The real estate we have done
Officially can start with.
Good evening, everyone. So we've gone through the revolving fund, which the board has done extensive work on. So the board is also looking at other alternate investment. For the real estate, this is just a proposal. The board has just set up a feasibility committee, and I'm going to look at the details and all those things. Then at our next available meeting, if we think that it's something that we can do, we'll bring it before members for approval. So it's not like the revolving fund that we work out everything. Okay, so I mean, I think today we've gone through the background of the fund. So the question is that why do we need to look at a real estate investment scheme? And these are some of the few problems that we think we can solve with a real estate investment scheme. One, it can help us to address the housing needs of members. It also be a source of income for the fund. It will also help the fund to diversify into physical assets. As we are aware, currently the fund is just invested in paper assets. So we don't have any physical assets with the fund. So real estate will afford it the opportunity to do that. Then we know that real estate is an asset class that protects against inflation. So for instance, if you had a house which was worth about 100,000 cedis, with the inflation that happened last year, the hyperinflation, let me see, that happened last year, and the increase in prices and the depreciation of the currency, the value of the property probably would have doubled or even tripled in certain instances. So it protects you against inflation. And also it will help members acquire their property so they can benefit from the fund while they are still working. We are looking at two projects, and we are going to work the feasibility on rental properties for doctors in the training center. So we know that every year residents leave their districts to come and train at the various training centers, Kolebu, Confanoche, Tamale. So we are looking at putting up property at these centers where we can rent out to members. This will also help to reduce the burdens members go through to acquire properties when they to rent when they are coming to start the program. So this is one of the things that we are looking at. And we intend to start with that if it's feasible. We intend to start with that if it's feasible. Then probably we'll look at putting up affordable housing for members. So basically, we are proposing to have various units. So we are looking at putting up 20 units, 1-bedroom apartment buildings at the training centers, and also 10 units, 2-bedroom apartments. And we're also looking at, for those coming for short stay, we know some residents come and they stay for just about 6 months to 1 year. Maybe somebody is training at one training center and they don't have some of the rotations there, so they may have to move for another facility. So we'll put up some well-furnished apartments so that they just bring their luggage, they stay there for about 6 months to 1 year, then they can move out. Okay, so these are some of the buildings we are looking at, but I will have to say that all these things is going to be guided by cost. So we'll look at, we want to make sure that we'll put up buildings that will help us get our monies as soon as possible. We are not going to put out any edifice that is to take us so long to get the money back. Okay, so this is the side view of one of the drawings we have. Okay, so the last part of the scheme we are looking at is the affordable housing. We are aware that most of the divisions have a land purchase scheme going on, and we have a lot of our members purchasing land. So if we are able to start and it's successful, we extend it to the various divisions. So we partner with the various divisions who have lands. We make arrangements and put our property for sale for members. And these properties will be relatively cheaper than what you get on the market, because you are going to leverage a lot of things. The finance, we know that real estate financing cost is one of the inputs that increases the cost of the building. So most developers may go for facilities in dollars. Some may go for facilities with very high interest rates. So when they put up the buildings, the prices of the buildings go up. And also you are looking at mass accommodation. So that, for instance, if a developer is building a house for only you, he may need similar resources to put up that one house. But if a lot of doctors can come together, 10 doctors, 20 doctors, they are putting up their structure at the same place, then the developer may be able to beat down the price for you so that the price is cheaper than you have to put it if you were putting it by yourself. Okay. And we are looking at members who already have title land. So we don't want any litigation land that will create issues for us. And eventually, if the revolving fund grows, you're starting with personal loan, but if the revolving fund grows, let's say some few years is doing very well, then it may be able to provide mortgages for members for them to be able to buy some of these houses that we put up. Okay. So this is some of the structures that we are looking at: 2-bedroom units. We are looking at 4-bedroom townhouses. We've looked at some figures which relatively are far cheaper than what is on the market, and we think that a lot of our members will be able to afford them if we get to that point. As I said, we will have to go through a lot of processes for us to be able to implement it. So currently, the board has set up a committee to look at the feasibility of this project, and we'll work on that, then get back to members for further discussion and input. The last meeting we had on Zoom, a lot of members made inputs, which we've noted, and we are working on it. Thank you very much.
Thank you very much, Dr. Abaite. Shall we put it up for him? He's done well. We are coming to the close of the meeting. At this juncture, I would want to take some presentation of plaques for deserving members who have made contributions towards the fund and its management.
Right. Thank you very much, Dr. Akon. So I mentioned earlier on in the conversation that we took over a very robust fund, and 6 years back when the Larsen Reindorf team took over the fund, they introduced a lot of structural reforms, which has helped strengthen the administrative setup of the fund. They helped create an investment portfolio, which to a large extent is what is guiding the function of the fund. And for me, taking over from chairman last year, Dr. Usu Setre, Dr. Jama Glover, have been a very wonderful resource. Now, in the heat of last year's economic crisis, we felt there was a need to re-engage our fund managers to have, if you wish, a shared burden in terms of cost cutting. And the previous board were very instrumental in significantly reducing the fund management fees from a previous value of 0.59% to an existing value of 0.51%. So if for nothing at all we remember the previous board with, it's something we should remember them for. It's the instrumental role they played in saving us significant amounts of money in terms of management fees. We as a new board, and by extension, members of the fund, want to show our immense appreciation to the Larsen Reindorf-led board. And for that, we have something small from us as membership, to say a big thank you to them, something small, but to say a big thank you to them for the immense contribution, the immense direction they have given the board and the fund over the past 6 years. To help us do this awards is one of the newly inducted fellows for the association, in the person of Dr. Mrs. Jikwa Planjou, who is a big figure in pediatric healthcare in the country, and who has been of immense support to those of us in the neurosurgery unit in Konfanoche in providing care for babies with all sorts of cranial and spinal pathologies. So, ma'am, we will call you to the stage and help us present these citations to the respective members of the board.
Please, I didn't go to Achimota. So my English, pardon me. I went to school in a certain forest. My old students are there. And they are loudly protesting. I went to St. Rose's. Dr. Najama Omanyeyo Glover, or who I call Dr. Najama Enuoblofo Omanyeyo Glover. Please come forward for your work. Dr. Najama Omanyeyo Glover was a member of the board from 2016 to 2021 and a member of the audit committee. You were an invaluable asset to the GMA fund during your tenure as a member of the board of directors and a distinguished member of the audit committee. Your unwavering commitment to scrutinizing minute details and offering a critical view on various issues have significantly contributed to the fund's growth and governance excellence. You were part of the team that exhaustively reviewed the trust deed. Throughout your tenure serving on the board, you exhibited a level of dedication and precision that were remarkable. Your insightful contributions during board meetings were highly regarded. As we bid farewell to you, we say, Aiko. Enuoblofopa.
And Prisek kicked them out in the final stages.
This one is violence. Dr. Frank Owusu-Sechere, aka Go. Dr. Frank Owusu-Sechere, Director, GMA Fund, Chairperson, Audit Committee, 2016 to 2022. You truly served the GMA Fund during your tenure as a director of the board and doubled as a chair of the audit committee. Throughout your tenure on the board, you demonstrated a remarkable vision and a strategic acumen, helping to drive the GMA Fund to new heights. You were part of the team that exhaustively reviewed the trust deed. Your ability to navigate complex negotiations with service providers yielded significant cost savings. In fact, I was part of one such negotiation, and it wasn't easy, which translated to the reduction of fund management expenses. As chairman of the audit committee, you exhibited unwavering diligence and an unyielding commitment to upholding the highest standards of transparency and accountability. Your collaborative and inclusive approach fostered a culture of teamwork on the board. Aiko. Please, what school did he go to? Go, what a school by now, Koy. Hey, school number. Okope school na. What a school by now? Apam. Oh, okay. A great. Okay. Please, you can take your seat.
Thank you.
Now to the El Chairmanu, Dr. Roderick Emil Ni Okain Larson Randolph. Citation in order of Dr. Roderick Larson Randolph, Chairman, Board of Directors, GMA Fund 2016 to 2022. You are an exemplary steward and a visionary leader. You demonstrated this during your tenure as the chairman of the board of directors. Your remarkable expertise and foresight ensure the continual growth of the fund. Your commitment to transparency and fiduciary responsibility set an exemplary standard for governance and inspired trust among unit holders. A defining moment of your leadership was a comprehensive revision of the trust deed, which you undertook with meticulous attention to detail. By leading in the revision of the trust deed to meet current needs of unit holders, you demonstrated an unwavering commitment to safeguarding members' interests and securing their retirement future. Furthermore, you prioritize building strong, meaningful relationships with unit holders through periodic engagement initiatives. You understood the significance of listening to the concerns and aspirations of the membership and leveraged on these interactions to foster greater unity and collaboration. On behalf of the entire leadership, we say Ayiko or Oyiwaladong. That's what it is. That's what it is. And thank you for listening to my quiet English. Thank you.
Thank you very much. And congratulations to the award winners and hardworking past members of the board. Chair, with your permission, would move to the last item on the agenda, which is the any other business hearing. Okay, shall we catch the eye of the speaker? Yes. Madam, I see your hand up. Yes.
Team and the incoming. I'm happy. You know, as we get nearer retirement, we begin to take this. I mean, we started in 2000. Then I think I've been a doctor for 6 years. So it seems so far away. I mean, but now it's catching up on me. So I was wondering, I mean, every now and then there's a proposal to increase the amount. Currently, it's 500, if I'm not mistaken. It's 300. Hey, why did I see 500 on my I'm praying it. Okay, so is there a statutory thing regarding when increments can be made, or any member can propose that? I know that individual members contribute on their own, but in terms of how much is contributed, when are increments based on someone proposing, or just anybody can?
Thank you very much. So these are questions. So if there are no other significant businesses, then would revert to the questions. So a business would be a completely new proposal for discussion by the board and members. So Dr. Brony, you have question or business? Question, okay, right. Any business? Right, thank you very much. We'll take the few questions and then we'll round up. So Dr. Brony, you have the floor. Can we get the microphone to...
Thank you very much. Please, my question is also in the form of a suggestion to the board. I was wondering if the 3 years minimum could be made as an affordability. If a house officer can afford the criteria mentioned by the strategist, if as at that time of applying for the loan, if the house officer is in a good standing to afford to pay when there's a default, I'm suggesting that the board grants that house officer the loan, or the medical officer the loan, because maybe during that time, the person would have had enough funds in the GMA fund after maybe 2 years of contributing. Or and also I want to know how much per month, aside the 300 cedis, an individual can contribute to the fund. Maximum amount you can.
Okay, thank you very much. Your questions. So we'll take the next one. Yes, cool. And then Sadat.
Thank you very much, sir. I think I'm coming back on what Dr. Amadouin said. I think she even thought it was 500 cities. But she asked a question. I want to propose that we increase the deduction, the mandatory deduction, maybe from 300 cities to 400 or 500 cities. And the reason I say this is that even though there are additional contributory modalities, it is practically very difficult for people to make that effort. Even though we now have a short code that we can still increase. Yet that decision is always difficult. But like I always say, we always learn to live within what comes to us until we go or we need some attention and we realize we have this much sitting there. And Brony, you remind me of me so much. In 2002, as a junior doctor spokesperson, I was bent on not making this deduction compulsory. And here I stand 20-something years down the line, asking that it should be increased. So maybe as things improve, you understand maybe the rationale. But my proposal now, I know it is difficult, but if we don't take this important, difficult decision, chances are that we probably will never. So this is an AGM. I propose that we move the mandatory from 300 maybe to 500. Thank you.
All right, thank you very much. So that would come in a proper motion. So cool. Yes, if
you can make a motion. If it's popular with us, then we can go through the process. But if it's not popular with us, then let's just take the decision now other than going through the motion. So, Cole, whilst you prepare the motion, we'll take the last question and then we'll get responses. Sadat, please.
I think this is just a discussion you're having. It's not necessarily a question because we're not going to leave all the questions to those on the high table. Some of them we have to do them ourselves. Particularly when one about the House Officers comments about making it 3 years.
Please put the microphone close to your mouth.
About the 3 years mandatory contribution for a loan. I will not advise any house officer at the beginning of his work to go in for loans. Besides, the 2 years, the likelihood of you going up controller for about 8 or more months is high. So in case you are out of the controller, how are you going to pay? It will come at a heavy toll to you. So the best is just make do with the little money that you have until you are enrolled in the controller. So that you can at least enjoy this. Make a small contribution for the 2 years of your house job. And then on the 3rd year that you may find yourself on controller, you can understand the benefit of this. Don't rush into going to loans. That's my advice. The other thing is about the increment of the GMA fund contribution. I think that if we have to increase it 500 as it says, then as part of the negotiations for the condition of service, there is something that you can add to it to make up for it. Because each year, there's place an addition to the COS that's negotiable on table whenever you meet the finance minister. So in that sense, maybe you can ask them like health insurance levy or something. It's that it do not come directly from the amount already that you are paying. Something must be added on it, and then you subtract it back into what your sources, the fund, not to go back without any negotiation, not any to add on it for negotiation. You get what I mean?
No, so
let me clear with you. I'm coming. He's saying that you are going to increase. He's proposing that you should increase it to the 500. I'm coming. And right now it's 300. So if I take a salary of, let's say, 3,500 this every in the month, and then you take 300 from it, 300 from it, maybe my take home maybe let's say 3,200. And I'm saying that each year GMA negotiates for an increment in salaries each year. So to make up for the 200 question, it shouldn't necessarily come from the amount of money that you take at the end of the month. We can add on to the condition of service, let's say a GMA insurance levy or something of that sort. Something should be added on it and negotiated for that increment and taken out from that to support what he's talking about, but not necessarily going back to go and take it from our original salary.
So
Okay,
Sadat, your
thank you very
suggestion
much.
is very well noted. Thank you very much.
Okay, so just a quick reminder of the questions, and then we should come to the end of this program in the next 5 minutes, unless course it's coming. Okay, so the question from Dr. Ama Edwin, when can the increments be made? And related to that we want an increment. So
Right. So
if you can address
Prof.
that.
Edwin, when I started off, I mentioned that the member, well, so by extension, Prof. Edwin, yes, I mentioned the member had a payout of 1 million Ghana cedis. And the reason why he had that large payout was because his monthly premiums were quite high. I think he was doing a bit northwards of 1,000 Ghana cedis a month. So yes, individually, you can increase your contributions. But I guess as to whether statutorily, we have set periods to increase, we don't. So we would just kindly wait for MD's motion to see whether as a house we will agree for increments to be done. Sadat's suggestions have been duly noted. I'll pass the message on to EXCO, to probably give it a thought as to how they can work it out. Broni's point about we making exceptional situations for our younger colleagues who may need some support of financing. So we have an engagement with your group next week, Sunday. JDA, we are engaging with you next week, Sunday. So some of these concerns can be addressed at the engagement. Because mind you, we have amended the rules for this thing to be operationalized. We have a draft of the operational plan, but we are yet to start operations. Target is first quarter 2024. So we will take on board some of your concerns and see how we can make exceptions as and when the need applies. Right, so there is a motion from our immediate past director, and it reads, the motion has been duly signed and dated. It reads, motion for increment of deductions. I, Dr. Frank Osu Setre, do propose that we increase the mandatory controller and accountant general deduction that is to the fund from 300 Ghana cedis per month to 500 Ghana cedis per month, effective January 2023. Sorry, January 2024. January 2024. So that is the motion that a member has presented to the House. So, Mr. Moderator, I will leave it for you to do the...
Okay, thank you very much. So shall we have any seconder to the motion? Okay, Dr. Amma Edwin's hand had caught my eye.
I, Amma Edwin, second this motion that is currently on the floor. Thank you.
Right. So do we have any counter motion? Okay, please, I wish I knew your name. You have a counter motion?
Good evening. Please, my name is Dr. Brown, Eastern Division. I understand that with the control deductions of the fund, I mean, from our distance, there's a certain administrative charges which goes to controller. Now, as we seek to increase the deductions, is it going to be also be accepted? Is it also going to increase or negotiate to fix that deductions? That's what I want to see.
Okay, thank you. I'll just respond to that quickly. So whilst you prepare your counter motion, yes, we have one from here. So the percentage is fixed, it's 3%. And we could negotiate with controller if it be, we could get something, but for now it's fixed, right? Yes. Please mention your name and then.
Dr. Ahija.
Division, please.
Greater Accra. Greater Accra Regional Division. So I, Dr. Ahija, counter the motion that was proposed by our esteemed former director.
Yes, go on. You are doing well, so just go on. So how much do you propose?
I propose that it remains at 300, or we calculate it based on a percentage, so that as junior doctors, we have more time to contribute to the fund. That's one thing. And for another thing, to our money is lower. So if you use the percentage, it would help us. And if our senior colleagues also use a percentage, they will be contributing more because their time is shorter. So I think that it would be a win-win.
Okay, so please.
If I may make an intervention
yes.
here.
All right, thank you.
So usually for matters this grave in terms of financial implication on our members, the usual practice is to present it as part of the agenda, because of the potential consequences financially it may have on our members. So what I would intervene as your duly elected chairman is that let's take note of this proposal rather than having it voted on and carried through at this meeting. Let's give ourselves some time to think about it so that if need be, we can add it to a main agenda item for a subsequent meeting, and then we can have the motion carried through. Now, if need be, we may call for an emergency meeting in the course of the coming year, just to take care of all the concerns different different segments of our membership have raised. So if it pleases the House, I would request respectfully that we put aside the current motion and then probably table it as a main agenda item at another meeting. That is my request for the House. Thank you.
Okay, you have the request of Chair, and I think that I, Akwa Akutampa, support the motion, not for any reason, but because time is against us and we would want to be heading towards the regional minister's home to enjoy our cocktail. And on that basis, Ko, yes, you've not caught my eye, Ko. So please, yes, I know. So it looks like would go with what Chair has said, but would allow Ko to make an intervention. And
Yes, thank you very much, Chair. I wholeheartedly agree with what you say. The only caveat is that this decision will have to be taken at an AGM, which is the highest decision-making body. So unless this AGM, we vote on it, that you think about this issue so that at a meeting that you will call, we can take that decision on it, then that will be valid. Other than that, it has to be an AGM decision. I hope you understand. So it can be that your intervention is very good, but if we don't agree with you at this meeting, then you can bring it maybe via a Zoom meeting 2 months from now and say, we want to vote on that. No. So maybe let's empower you at this AGM so that you can come back knowing that we have agreed that you can come back maybe 2 or 3 months down the line so that we look at it again.
So what I would rather have us do is to shift it to the next AGM, because, I'm sorry, now the other financial considerations that are going to be discussed tomorrow, which again need to be decided on. So let's probably shelve this issue and then have a rediscussion on it at the AGM next year.
All right, thank you very much, Chair. And I think this chapter is closed so that we can close early. The last thing we would want to do so that we can proceed to leave here is to take a look at the amendment date as was proposed. Prof. York, you cannot leave at this time. It was your interest. So this is how it stands, and it would read in our books thereof. And it's been carried already, and it is for the attention of all of us here. If there are any corrections to be made, we can make it. And this matter is also sealed. Please make it smaller. Right, okay. Must I read? Or it's clear? Okay, I'll read. So dated 10/11/2023, 6 p.m., motion for amendment of the Ghana Medical Association